please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, many twists in the Essar Steel story ahead of the Supreme Court hearing. Now, Arcelor Mittal wrote to resolution professional accusing Vedanta of environmental and human rights violations, but later retracted that letter. On the other hand, Numetal has sought Arcelor Mittal's disqualification under Section 29A of the Insolvency Code. Anshu Sharma joins us with the details. Anshu, over to you.
That's right. Interestingly, there's a case which will be heard tomorrow in the Supreme Court where Arcelor Mittal has filed a case against Numetal's eligibility in the race for Essar Steel. Now, let me tell you the tale and the twist in the entire Essar Steel bidders. Now, we understand on September 15th, Arcelor Mittal wrote a letter to the resolution professional in the matter of Essar Steel, saying that Vedanta has flouted environmental as well as human rights laws, not only in India but as well as abroad. It has highlighted some of the key projects of Vedanta like illegal mining in Goa, Lanjigar refinery, copper unit in Tuticorin, as well as Zambia copper mining, where there have been allegations that the company has flouted environmental laws and disregarded safety rules. Now, Vedanta has rubbished the claim and said that these are unfounded allegations against the company to reduce competition for Essar Steel. Now, in a fresh twist, Numetal has written a letter to State Bank of India as well as the resolution professional and cited that Arcelor Mittal has not made enough disclosure about his brothers, who have some companies which are running as non-performing assets for the past 1 year. It has highlighted some of the companies where Pramod Mittal as well as Vinod Mittal are either promoters or shareholders. It has sought clarity by September 18th, which is the date also for the Supreme Court hearing. So clearly there's a huge battle happening between the corporates which are eyeing Essar Steel. Back to you.
Well, turning our attention then to the derivatives market. Remember, in yesterday's trading session, the Nifty ended down more than 100 points. And the institutions, well, they were net sellers. Both the FIs and the DIs, you put those numbers together, they sold roughly around 300 crores, very, very approximately. Let's get some of those graphics up for you on the screen. The Nifty open interest in yesterday's trading session, there was some unwinding. So if you take a look at it, close to around 2.5 lakh shares did see some unwinding. And from the top, we were mentioning even in the previous trading session, the premium on the Nifty that was close to around 50 points at the start. Now that's reduced to around 30 points, very, very approximately. In the F&O market, the FIs, what they did yesterday was they added close to around 6,000 short contracts. So what they did basically in Friday's trading session was that they shut out some of those short contracts. Yesterday, they believed that they were back in the game, the shorts. So the bears, they came in there and they added close to around 6,000 short contracts. In Friday's trading session, they had closed out nearly around 8,800 short contracts. If you take a look at the setup on the index futures, the long positions are now down to around 42%, and the short positions are at around 58%. Remember, at the start of the series, it was totally the reverse. The long positions were at more than 60% approximately. Now, that's what the FIs did in terms of the call contracts that they had bought. You know, if you're looking at it, in Friday's trading session, there was some shutting out. There was some buying of call contracts. In fact, that's not the graphic play that we're looking at. In Friday's trading session, what they did was that they bought some calls. In yesterday's trading session, what they did was that, in fact, they shut out some of those calls because they were not making any money out there. Overall, the FIs, they bought close to around 3 puts for every 2 calls. So they bought protection on the downside. And also it appears that the downside is protected because they wrote close to around 5 puts for every 3 calls. In terms of stocks that you're looking at, well, Adani Enterprises, that stock continues to be in the ban. But what's come out of the ban is Balrampur Chini, because yesterday, in fact, we saw a huge short covering bounce out there. The PCR as well, that's down to around 1.28 odd. Remember, at the start of the series, it was more than 1.5. So keep an eye out on that mark. Called writing really was the order of the day. You had the 11,600, 11,500, 11,400 calls, all of them very, very active in yesterday's trading session, while the put writers, they ran for cover. The 11,500 put shed close to around 5 lakh shares. Approximately levels you're looking at, the bulls will believe that they're still in the game if they can defend the 11,250 odd mark, because that's from where we saw a bounce the last time around last week. Home on the Lal Street, the rupee depreciation and weak global cues weighed down, leading the markets to end down close to around 1% odd. The Nifty breached the 10,400 mark. It was dragged down by heavy weights like the Reliance Industries and the HDFC Twins. The Sensex too slipped below the 38,000 mark, falling more than 500 points. The Nifty Bank breached the 27,000 odd mark and ended with cuts of around 350 points. While the mid-caps, well, you have to say that was a relative outperformance that we saw, though it ended with a cut of close to around 100 points odd. But on that note, let's get you some opinion then on the rupee and the markets going ahead from Rahul Chadda of Mirae Asset Global Investments.
We all knew about India's trade deficit, the current account deficit, which was hitting about 2%. I think where the currency gets all the more vulnerable is in this escalation of trade war between China and US, where we've seen renminbi slip, where we've seen the rest of the current account deficit economies see the currency slip. So what you wanted from government was something which was kind of a more concrete. This measure works well in normal time. But I think what the market today needs is a reserve accretion of $30–40 billion. Market needs is a kind of a comfort that central bank has these $30–40 billion to defend the currency. It's more an issue of confidence building. Basically, if you look at what is the event calendar over the next 6 months, you've got highly likely this escalation of trade war between U.S. and China, where U.S. may impose tariffs on another $200 billion of imports from China, which means renminbi slip. And historically, we've seen rupee slip with renminbi. We've got sanctions on Iran coming around November 9th, so that may lead to a flare-up in crude. And then we've got election uncertainty. So we've got 6 months of uncertainty here ahead of us.
All right, uncertain times then. That's the word that's coming in from Mirae Asset Investments. But Anisha, tell us, how are you reading trade setup early this morning? The good news, I think, is that the dollar index is holding at around 94.5 odd, and Brent crude prices as well mildly lower. Tell us your reading.
Well, yes, those are a couple of positives, but the overarching negative might be that the trade tensions are escalating. So that is something we'll have to watch out for. But as we were telling you earlier, the markets yesterday ended with deep cuts. The Sensex fell over 500 points. It was the Bank Nifty that was coming under a bit of pressure, though the OMCs tried to support the markets. But if you look at the cash market volumes, they're not very disappointing. Yes, the FIIs sold around 106 crores in the cash markets, and the DIs also sold around 180 crores. But the numbers are not very big. Other than that, what is making headlines is rupee. Now that continues to weaken. The rupee ended yesterday at 92.51, despite the government talking about bringing in the measures to really maintain the rupee value. Other than that, after the market close, we heard from sources that the Cabinet Secretary-led task force is examining import substitution in 5 sectors. Let's see whether that is able to provide some support to the rupee today, and of course the dollar index as well. The other important thing that we keep on watching out for is oil. Yes, you mentioned that it's trading around that $77.5 per barrel mark, down about 0.4% in trade today. Well, yes, the only positive that came out of this deepening trade concerns between US and China is that it has raised questions on the oil demand. So that's the reason we are seeing a tad bit of pullback when it comes to the oil prices, though the losses were a tad bit limited given the impending sanctions that we're expecting on Iran. Other than that, if you look at the global cues, well, yesterday we had quite a bit of weak close when it comes to US. The Dow was down about 92 points. Nasdaq Composite dropped around 1.4%, the worst day that we have seen since July 27, and a lot of these tech stocks were actually coming under a bit of pressure. Apple fell around 2.5% after there were concerns of the US-China trade war impacting that stock, and a lot of brokerage action in US, and that's the reason Twitter fell around 4% yesterday. That stock is down about 40% from its 52-week high. Amazon as well as Micron fell after the brokerage had a tad bit of negative view. Now, after the US market closed, there was another negative that came by, and that is that US has put in a 10% tariff on $200 billion worth of Chinese goods, and that will become 25% by the end of the year. And that's the reason that the US stock futures also fell. So if you look at the Dow futures, the last time I checked, that one was showing a downtick of another 80 to 90 points for trade today. Of course, there were some tweets from President Donald Trump that escalated the trade war concerns, and now the expectation is that China might retaliate. and that's the reason perhaps we are seeing a bit of weakness in Asia as well. Of course, when you looked at the Asian markets as well, most of the markets except Nikkei were trading in the red. XJF Nifty has recovered from the low point of the day. The last time I checked, it was showing a downtick of around 18 points. When we started off that show, it was showing a downtick of around 30 points, so off the day's low. But in terms of the local cues, of course, there's a SEBI meet today to discuss the MF costs, etc. And the big news, of course, is the three-way, the bank merger that the finance minister announced yesterday.
Oh, we'll keep an eye out on those stocks for sure, Anisha. So you gave us, a trailer. Tell us, what are the stocks you should be looking at?
Well, yes, first up, all these three banking stocks and the rest of the banking stocks as well. Because remember, Bank of Baroda chairman told us that the merger process will take 4 to 6 months. And they believe that the combined bank will benefit from Dena Bank's CASA. But a lot of brokerages are talking about how this deal might be very negative for Vijaya Bank as well as BOB, given the high NPAs that we have in Dena Bank. So that is something that the street will watch out for. ILFS Group was buzzing in trade yesterday. Well, we heard that ILFS Transportation, the interest which was due for NCD holders has been paid. So there has been no default, and that should give some breather to the banks as well as the investors of ILFS Group. Moving on to Gujarat Gas, wherein they have backed an order to expand the city natural gas distribution network for the district of Narmada in Gujarat. So that's a bit of positive there. IDEA, the board has considered and approved a scheme of amalgamation with Aditya Birla Telecom Limited. So keep an eye out on that one. Infosys has made additional investment of $1.5 million in one of their companies. Not a very big amount, but do watch out for that given the move in rupee as well. Bank of Maharashtra, a tad bit of negative because the RBI has rejected their proposal to set off the accumulated losses of the bank of the tune of around 2,500 crores against the balance that was lying in share premium. OFS Technologies has recommended a bonus share issue, so that will be in focus. Goodrick, which is a part of the company of McLeod Russell, has decided to acquire a couple of these assets for a value of around 32 crores. Small acquisition, but let's watch out for the reaction on that one. Gujarat Alkali, something that we already know, they're working on the expansion, and that can add around 70 crores to the annual revenue. NCPC, an important news because the board has accorded the investment approval of 9,800 crore worth of an asset, so something that will definitely we'll watch out for. And lastly, on MGL, Nigel, wherein the shareholders have approved the foreign investment limit to be enhanced to 40% versus 24%. So maybe a tad bit of reaction on that.
Okay, all right. Thanks so much for that, Anisha. Well, I think those three stocks we should pull up are Dena Bank, Vijaya Bank, as well as Bank of Baroda. Yesterday, the screen told you that the street is definitely sensing something. Let's pull up all those three stocks. When you have the Nifty down more than 100 points, you have the Sensex down more than 500 points, and you have Bank of Baroda, pull up Vijaya Bank as well as Dena Bank. They were relative outperformers in yesterday's trading sessions. Someone was sniffing it, but I'm not sure which one of them will make money in today's trading session, because all of them more or less flattish when the markets ended.
Well, let's take a quick look of how the Asian markets are doing, because remember when we started off the show, SGX Nifty was suggesting a downtick of around 30 points. Right now, it's just showing a downtick of around 4 points, so just a tad bit flat with a negative bias. Other than that, if you look at the Nikkei as well, that has gained ground, so that one is trading up around 1%. And even if you look at the Kospi, that has shown a sharp intraday uptrend, because that one has also moved in the green. Remember the last time we checked it was trading in the red. And even the Shanghai markets are not showing too much of a downtick given the US tariffs that were imposed on $200 billion worth of goods. So maybe a tad bit of recovery is what we are seeing in SGX Nifty. Let's see how the rest of the day pans out. But moving on then, in a bid to stem the fall in the rupee, a government task force is looking at import substitutions across 5 sectors. Shireen caught up with Ratan Roy of PMEAC and began by asking about the rupee's tumultuous journey and whether government's measures over the weekend will help curb the rupee's volatility. Take a listen.
There is no volatility in the currency markets. What you're seeing is a decline in a depreciation across all emerging markets. And if you look at India, it is remarkable that while there is a depreciation, there is very limited volatility. If you look at what happened with the yuan, for instance, today, the renminbi, that is what I would call volatility. So we've had this for 2 reasons, as one of the commentators was saying earlier. The emerging market investors have algorithms. Those algorithms respond to many things. One of the most important things to respond to is what the US does and what China does. The reiteration that the US will impose $200 billion tariffs on China and the reaction of the Chinese yuan has led to two things. One, the indubitable realization that there will be opportunities to put money into the US in the short term, which are profit-making and credible. And that would naturally mean there'll be less money to put into emerging markets. Second, the fact that the Chinese currency reacted in a volatile fashion would then mean that they would be more cautious in what they put into emerging markets. So there would be some withdrawal from emerging markets, and that is reflected in the depreciation. Right. That being said, it is not what I would call a sort of shock depreciation, right? It's in paise, and therefore in sense it is rather small. The government's announcements over the weekend, I think, did two things. One, it showed, to quote Charles Dickens, that Bacchus is willing, in the sense that let nobody be under any misapprehension that one, the government will make sure that it deploys all resources it has under its control if someone in these circumstances tries to short the rupee. And two, there is no holy cow or bull or pig or other animal in our policy which would inhibit the government from taking steps, including taking a good hard look at what can be done with respect to import substitution. And so what the government has done is offered some carrots on the left-hand side in terms of, attracting, foreign resources in, and that's a short to medium-term measure. It's also signaled its willingness to take the bull by the horns and actively look at import substitution in the medium term, which sends a positive signal, which I welcome. I would like to make one caveat. Import substitution does not mean import controls. There's a range of options before government, and that those options can be exercised only in consultation with the private sector on what we can do to reduce our dependence on imports in the 5 key areas that the government highlighted according to your report. And what the government has said is it means business, and it started work on this matter, which is excellent, better late than never.